A pound of ground beef costs $6.89. It has sat within a couple of cents of that all year, and it is up about 10%. Steak is at an outright record. The animal it came from is cheaper than it was a year ago. Fed cattle are down about 8%. Wholesale beef is below where it was last summer. The cattle market's high for this cycle is behind us. It came in May, and almost nobody noticed because the thing you buy has not caught up yet. So, 3 things. What actually drove beef prices up, which is not what you have been told? What is quietly eating the shortage? And why this is going to happen again? Ground rule: information and analysis only, not financial advice. Nothing here is a recommendation. Start with the part that is true. On the 1st of January, there were 86.2 million cattle in the United States. That is the smallest herd since 1951. Beef cows specifically, the mother animals, the ones that make the supply, are at their lowest since 1961. 7 straight years of a shrinking calf crop. Though on the 1st of July, for the first time this cycle, the total herd ticked up. That is the story every article runs. Small herd, high prices. And it is not wrong, exactly. It is just not the main thing. Kansas State put rough numbers on it. Of the beef price increase across 2024 and 2025, their illustrative split is about 14% from supply shrinking and about 87% from demand rising. Americans are on track to eat about 59 pounds of beef a head this year, the most since 2010 on the government's own forecast, at these prices. That is not what a shortage looks like. A shortage means people buy less because they cannot afford it. This was people paying more and buying the same. And then, the tell. Beef production is down 5.5% this year. Cattle prices fell anyway. Supply got tighter and the market paid less for it. Live cattle futures are down about 14% from the October contract's high, and the forward market is paying less for cattle a year from now than for cattle today. The whole curve slopes down. So where did the shortage go? 3 places, and none of them is the herd. 1. Weight. The average steer carcass is running about 30 pounds heavier than last year, and about 65 pounds above its 2020 to 2024 average. Fewer animals, but each one is bigger. Here is what that does. Cattle slaughtered this year is down about 8%. Beef produced is down 5.5%. Roughly a third of the missing cattle never went missing in pounds. 2. Imports. In the first quarter, beef imports were up more than 15%, while exports fell almost 18%. The quota Brazil ships under was filled in the first week of the year. 3. And this one is days old. On August 21st, the administration announced it will waive out-of-quota tariffs on 300,000 tons of imported beef for grinding for 90 days. That is about 1/10 of a year's beef imports, arriving inside 1 quarter. Concentrated, it would lift imports by roughly half. The cattle market answered within the hour. October live cattle fell nearly $5. September feeders fell more than 6. And on August 24th, the cattle border with Mexico reopened after being shut for screwworm. Historically, that is about 1.1 million animals a year, roughly 3% of American supply. Economists who cover this expect no measurable price effect from that anytime soon. It takes months to ramp, but it tells you which direction policy is pointing. Now, the part about the herd that really is true, and it is the best economics in this story. A cow herd is not inventory. It is a capital stock. You grow a breeding herd 2 ways: keep more heifers or send fewer cows to slaughter. Both mean beef you did not sell this year. And the heifer you keep will not put a marketable animal on the rail for years. The Kansas City Fed finds inventories only start growing 2 to 3 years after retention begins. Farm Bureau counts 30 months just to get to the calf. Add the time to finish that calf, and a choice made this year is beef at the end of the decade. Ranchers have started. On the 1st of July, there were 3.8 million replacement heifers, up 3%, 100,000 head from 3.7 million. It is the second report in a row to rise. But the economists who watch this will not call it expansion. Oklahoma State's read is that it is not enough to signify real herd growth. Aggressive retention, he says, would run 4 or 5% for a year or two. And there is a measurement problem worth saying out loud. The statistics agency publishes a margin of error for the total herd. It does not publish one for that heifer line. 100,000 head on a base of 3.7 million may not be distinguishable from no change at all. So feeder supplies stay tight through 2027. The government now has production roughly flat next year. The extension economists expect another decline. Either way, that is a floor. It is not a launch pad. The Kansas City Fed put a number on the trade-off. 1% more heifers sent to slaughter instead of the breeding pen means cheaper beef now, and beef about 0.6% dearer 2 years later. The relief and the bill arrive in that order. So, the base case. Retail beef stays expensive and drifts sideways, rather than either spiking again or breaking. The herd puts a floor under it. Weight, imports, and policy hold the ceiling down. And what would flip it? 3 conditions, not 3 dates. 1. Demand. If most of that increase was demand, then demand is what can take it away. Watch pounds sold, not the price tag. If volume rolls over while prices hold, that is the signal. 2. Weight. Carcass weights are doing 1/3 of the work, and they already peaked in March and have eased since. If that continues, headcounts start mattering again, quickly. 3. The packers. On industry estimates, they are losing money on the average animal, even with the herd near a 75-year low. One company has closed, announced the closure of, or put up for sale 4 beef plants this year. As that capacity leaves, the bid for cattle gets weaker, not stronger. And that points at the thing underneath all of this. The Cattlemen's Association said the announcement and other market interventions throw cold water on the prospect of herd expansion. Which is the loop. Prices rise. That becomes a political problem. Cheap beef arrives. The rebuild stalls. The herd stays small. And in about 5 years we do this again. The cattle cycle is not weather. It is a decision made one ranch at a time under a policy that keeps punishing the people who make it. If you want the version of these stories that survives a fact check, subscribe. That is the entire operating principle here. Next time, why your electricity bill went up while electricity itself got cheaper. And once more, information and analysis only, not financial advice. We don't tell you to buy or sell anything.